Analysts think that there is a 70% chance of a recession going into 2024. And in today's video, we are going to be diving in and we are looking at the top 5 ETFs to buy before this crash. So I hope you guys all enjoy it. If you guys get anything in value out of it, hit that like button, subscribe. If you guys are new to the channel, new to the team, we talk about everything money, stocks, money management, trading, investing. So subscribe, join the team. And if you guys want to learn more about investing, trading in the market, I just released a brand new swing trading course and you guys can learn my mindset, how to find stocks, my strategy. I'll put that down below and you guys can use code YouTube to get 20% off. So make sure you guys check that out. So guys, let's dive into this. Let's go. So like I said, there's been analysts stating that there is a 70% chance of a recession going into 2024. So I developed a list of the top 5 ETFs that I would recommend having in your portfolio beforehand. So let's dive into ETF number 1. Now this one here doesn't come at a major surprise. It's VOO. This is Vanguard's S&P 500 ETF. The best thing you guys can do during a recession is continue to invest in the index. And the reason why that is because through all the ups, through all the downs, the bull markets, the bear markets, the Great Depression, the dot-com bubble, the 2008 crash, we've seen an average return rate of about 10%. And if you guys are even smarter traders or investors and you buy during recessions, it jumps from a 10% return all the way up to a 22% return. So crashes absolutely represent a fantastic opportunity to buy into the S&P 500 at just a more affordable price, and it's almost a guaranteed recovery. Now some of the holdings in here are absolutely beautiful. We got companies like Apple, Microsoft, Tesla, and a variety of other American icons, American staples. And it does pay a small dividend as well. All right, ETF number 2 is ticker symbol VUG. This is Vanguard's growth ETF. So this one here seeks out these high quality growth stocks. And the reason why I absolutely love investing into this is because the holdings in here are beautiful. Yes, we have companies like Apple, Microsoft, Amazon, but we also have companies like Google, we have Tesla, we have more stocks that are a little more volatile, but overall carry a lot more potential. The great thing about buying these during recessions is you can buy these fantastic ETFs, these fantastic companies at just a more affordable price. The great thing about these is their revenues most likely stay the same. They're the same company, you're just buying them at a cheaper price. So once the stock recovers, you're making a lot more money. Now this one here, expect a little more volatility, but overall a little more growth and a lower dividend, but it's a fun one to invest in. The third ETF that I would recommend having in your portfolio during recession times is ticker symbol VIG. This is Vanguard's dividend ETF. And the reason why I absolutely love this one is this one here expects some dividends. This one here seeks out these high quality dividend stocks like Coca-Cola, Home Depot, Johnson & Johnson, all these fantastic dividend stocks. And the great thing about investing into dividend stocks during recessions is you continue to get cash flow, and dividend stocks don't sell off as much compared to normal companies that don't pay dividends like Google and Tesla. The reason why that is people are more likely to hold a stock that is paying them cash flow, and they're more value companies rather than growth stocks. And some of the holdings in here that we have are companies that I absolutely love, like Microsoft, Apple, ExxonMobil, and a variety of other ones. All right, the fourth ETF that I would recommend having in your portfolio is another dividend powerhouse. It's ticker symbol SCHD. This is a Charles Schwab dividend ETF. The reason why I love this is we've seen on average about a 12% growth per year out of this. It struggled the past year just because of the value companies in it, but the companies in it are Verizon, United Health, Broadcom, and a variety of other absolutely beautiful dividend icons. And this one pays an average of about 3% on that dividend yield, comparing to the S&P 500, which pays about 1.5%. This one here doubles what the S&P 500 does, which is great. So you guys can expect a lot more cash flow and a little less volatility when investing into these. And that's why I love holding them during recessions, is because in most cases, the stock market's just getting annihilated, and holding some of these ETFs and these companies are a great way to reduce that sell-off. But you guys can expect a little bit of a slower growth out of these and just more cash flow. All right, the fifth and final one that we're going to be covering is a little fun one. This one here is going to be a super volatile, super risky one, but it's still fun. This is an AI ETF, and now this one here is ticker symbol ROBT. The reason why I honestly love investing into AI and technology is it's going to continue to grow. We all know that technology, we're getting more and more dependent on technology each and every day, and artificial intelligence is rated to grow at about 37% annually for the next 10 years. So if we can make some money off that during these times where we possibly get some sell-off, that's going to be absolutely beautiful. But we'll have companies like C3AI in here, we'll have companies like Tesla and Google, but we'll also have some more smaller companies, some startups that if they're the next Tesla or the next Google, that this thing's going to absolutely skyrocket up. Expect a ton of volatility out of this. It's definitely a growth pick. It's not going to be one that I would recommend putting your retirement fund in, but it's a fun one to put a couple bucks in and just see what happens with it. So investing during recessions can be tricky and difficult, but the best thing about it is just continue your process. That's obviously the best strategy that I would recommend, is just continue to invest and pick companies that you love and believe in and invest into those as well. But recessions shouldn't be looked at, as a scary place. You should look at it as a place where you guys can just buy companies you love at just a more affordable price. So guys, I hope you guys all enjoyed this. If you guys did, hit that like button, subscribe, and we'll see you guys later. Remember to hit that like button, and we'll see you guys in the next one. Take care.